Um, so this webinar is about things to know before you accept your ESOP grant letter, right? And I would like to start the webinar by introducing our speaker for today. So our speaker is Manish Panwar, who is the business head at Vega Equity. So Manish is a chartered accountant by profession, and he passed out in 2015 from ICAI. And he's worked with unicorn and big startups where he managed their end-to-end ESOP processes. Those startups include the likes of Blue Dart, Delivery, Farai, and many more. He has a versatile background in investor relations, financial reporting, and corporate finance. And overall, he has more than 8 years of experience in designing, consulting, and implementing various stock option plans for startups. Currently, he serves as the business head at Vega Equity, where he takes care of growing the entire business and the product side as well. So, I would like to welcome Manish Panwar.
Hi, thank you, Nikhil. Thank you so much for the lovely introduction and organizing and hosting all this. And thank you everyone for joining in. I hope it would be a very fruitful and you will get a great return on investment of your next 1 hour. Right. Thank you, Nikhil, once again. And one request from all of you who has joined this webinar in certain expectation in knowing something new maybe today and expanding your existing knowledge base. So a quick request, let us make this session or a webinar quite interactive one, which can be a two-way flow. So we are happy to receive any questions or queries you may have in between while we will be running this entire scenario. All right. Let us start the topic, which is today like things to know about ESOP, right? So I'll tell you my own experience before even going into more details and what all is this about ESOP and grant letter. As an individual or as an employee, as a stakeholder from either side, maybe employee or the employer side, think of the day or think of a moment when we as an individual has listened the word ESOP for the very first time. What thought came in our mind, how we reacted to it, right? So I'll tell my own experience. While I was working with a startup, and it was a first time allocation, and lot of seasoned and the first time employees or the early employees in that organization received ESOP from the organization via email. And everyone at the floor, maybe from finance, company secretary, tech, sales, marketing, from all the departments, they start discussing about it. Ki, what is this? What will be the repercussions? Why it has been granted? What we will do now? This, whether it's a instant incentive which is going to be credited on our salary of the next month, or the taxation scenarios and everything, right? So this is one thing. And when you start or any individual start googling it or searching it on the public domain information, we get certain maybe generic answers to our generic queries, right? So let us make it very specific here today. Now, as an individual, when you listen it, so ESOP, when we listen it and we say ye kya bala hai, हमें नहीं पता, right? We do not know what is ESOP. So n number of doubts and then n number of queries to it, right? आपके मन में व्हाट कम्स टू योर माइंड जब आपने पहली बार ESOP सुना? लेट अस मेक अ विजुअलाइजेशन ऑफ दैट डे और दैट मोमेंट एंड देन लेट्स स्टार्ट दिस discussion or a webinar. So these are certain common questions comes in a mind of every stakeholder, whether we are an employee or whether we are an employer, or maybe we are controlling a ESOPs in an organization by being into HR or company secretary function, right? Okay. How I should take ESOPs or how I should be aware of certain terms and conditions about ESOPs and its workflows, right? When ESOP is granted to us as an employee, right? I'm talking about this side of the table. When ESOPs are granted to us as an employee, how should we read the grant letter, right? It may be a one pager, it may be a 2, 3, 4 pager, more detailed, more crisp, and more specific to basis the organization's policy, right? So how we should read it, right? How should we calculate the potential worth or the net worth that can be generated or created for us through the ESOPs, right? So we should know, okay, this has been granted to us in terms of units. Maybe let us know about the value of it, right? By today's value, by future value, what will be the repercussions after 2 or 3 or 4 years when my vesting will be over. So we'll cover everything in detail. And the most important question, query, doubt in every individual, especially in India or outside India, right? Okay, how the taxation would work in this, as an employee, as an employer, as a stakeholder of the entire option plan, how that tax implication will be, and when it will arise, when my liability will arise, and so on, right? So these are certain things which we are going to cover, and you may have your own set of queries and questions you can ask in between. And we have put a separate last 15-20 minute session for having those Q&As between us, and I hope all the queries will get answered by that time, right? Now we have listened, or maybe we have received ESOPs as an employee, or my founder, co-founder, or CEO has asked me as a HR function or as a company secretary team to prepare a ESOP scheme and start allocating ESOPs to the identified or eligible employees, right? Now I see ESOP letter, or I see these ESOPs terms, I start Googling it, and I come across a word cliff period, right? Now people have a doubt, say, okay, what is the cliff period, right? And then what is vesting, what is the vesting period and condition, and blah blah blah, whatever terms we keep on reading over the Google, our queries, our doubts become more complex and keep on increasing, right? So before jumping into that session, let us, in a quick session of 1 or 2 minutes, understand what ESOP is, by not in a legal definition or a technical definition. I'll try to answer or explain it in the most, what I think, most easiest example, because I believe it should not be very technical, because technical definition can be found over any public domain platforms, right? So let us suppose you are an employee of a company. Now your founder or CEO ask you, okay, hey, Mr. Ramesh, you will be given a Honda City car, right, if you stay in the company for next 4 years, or maybe if it's a performance linked grant, if the company's goal, EBITDA, PAT, or your personal OKRs get achieved over the next 3 or 4 years, you will be granted a Honda City car whose fair market value or the current market price is say 15 lakh rupees in the showroom. But just because of the fact you are an employee of this company, you will get it at by paying 2.5 lakh rupees to company, right? So a Honda City car which is of 15 lakh rupees, you will get it at 2.5 lakh rupees. Just the condition is you need to stay with the company for the next 4 years, or if it is linked to certain performance parameters, you need to achieve those performance, or the organization's performance or milestone should be achieved by that date, right? And now take an example. So Honda City car is your ESOP, right? Whose market price is say 15 lakh rupees. So the current share price is 15 lakh rupees per share in the market. But because you are an employee, so you are getting it by paying 2.5 lakh rupees to company. So 2.5 lakh rupees will be your exercise price. सो कटिंग इट वेरी शॉर्ट, 15 लाख रुपए की चीज 2.5 लाख रुपए में मिल रही है अप फ्रंट, 12.5 लाख का मुझे एज ए एम्प्लॉय गेन हो रहा है, तो दिस इज ईसॉप. So I am getting something at by paying 2.5 lakh rupees, which otherwise I would have purchased from the market at by paying 15 lakh rupees. So in a nutshell, this is ESOP, and it is being E in the ESOP is termed as employee. So employee stock option plan. So employee, anything or any option which organization is giving to its employee, just because he or she is an employee of the company, and till the time he or she remains the employee of the company, these options or the rights will keep on vesting to him or her, right? So I hope this was very basic or very easy example, and we'll discuss things in detail regarding the technicalities and more key terms of the ESOPs, right? Now comes a cliff period, right? When we receive a ESOP, right, there is a cliff period. So what is a cliff period? So cliff period is the minimum time you need to be with the company or you need to spend in the company before your first vesting happens, right? So I have been received 100 ESOPs from my organization under a vesting schedule of say 25% will get vest over the next 4 years. So my 25 option will get vest after the first vesting happens. But in India, if it's an Indian registered entity, so the cliff period as recommended or suggested by the SEBI is 12 months, right? So a cliff period should be a minimum of 12 months between my grant date and my first vesting date, right? So it can be different in different countries or under different regulation and compliances. If it is not an Indian company, so cliff period in say Singapore or US, it can be 1 month or it can be say 15 days. So cliff period is the difference or the period between your grant date and the first vesting date. So this is the minimum time you need to spend with the company in order to get your first options vested. Now another term which we come across is say vesting period, right? So now in my early example of Honda City, right? So you have received a Honda City option at 2.5 lakh, which is where the current market price was 15 lakh rupees. But your employer or CEOs told you you need to stay with the company for 4 years in order to get it completely vested, right? So vesting period is the complete period in which your 100% of the option get fully vested, right? So if you have received 100 options for 4 years, so 4 year is your vesting period. This includes cliff period as well, right? So people have doubt or maybe confusion कि okay, my 4 year vesting period will start from the grant date or say from the issuance date or maybe from the cliff period when it ends. So the answer is the vesting period is a total period between the grant date and the 100% of the last vesting date, right? So it includes cliff period as well, right? So in many cases, it can be 2 years, it can be 5 years, it can be 6 years. Generally in India, it will be around 4 or 5 years, minimum or maximum, right? There are certain vesting conditions as well, right? Which generally we overlook or we do not go into more details because as a human nature or psychology, we just read the quantitative information in any document. I'll come in more detail about those in the upcoming during the tenure of this webinar. But as a human nature, we'll focus more on the quantitative terms on any document, any book, any letter, or any public information, right? So vesting conditions are certain conditions which are linked to your vesting, right? For example, I have given you a Honda City car for which will get vested 100% over the next 4 years, right? But you need to accomplish or you need to achieve three milestones between that period. For example, after the year end one, your annual appraisal rating should be 5. So this is first vesting condition. If your rating is 5, then it will get vested, right? Second can be linked to the organizational achievement, which is like if organizations achieve a EBITDA of 15% and above, your second vesting will happen. So vesting conditions means all the factors and all the parameters which trigger your vesting, right? Or with achievement or without achieving that, your vesting may get hampered, right? So this is called vesting condition. If you read your grant letter or if you read your ESOP policy in detail, it is specifically covered in the entire document. Now look at an example with a graph on the right hand side of the slide, right? So I'm taking an example to explain cliff and vesting. So from the grant date, so grant date is today's date, right? So the total period or vesting period is 4 years here. So this is, you can see 48 months is my vesting period, right? And cliff period is 12 months. So I'm taking a very basic and simple example here to explain you vesting period includes cliff period as well. It is not outside the total vesting period. So look at this graph, you will easily understand from my grant date, the cliff period is 12 months. And after 12 months, my first vesting is happening. And then at 24 months, the second vesting, 36 months, the third vesting, and the final fourth vesting is happening at 48 months, right? So clearly you can see vesting period is 48 months and the cliff is 12 months, right? Now my vesting has completed or my vesting is in process, right? So I have received 100 options from my company. 25 options will get vested over the next 4 years. Now I am sitting at say year 2, where my 50% of vesting is completed. For example, my 50 options has been vested. Okay, my company has given me 100 options at a exercise price of X, right? Now I am at year end 2. At year end 2, my 50% option got vested and 50% are still unvested, right? So that today, whatever happens, if I exit from the company or if I leave from the company, so you should be clearly aware about your vested options and unvested option at any given point in time, right? And how and when you can exercise it, right? So to exercise, before you exercise, in your grant letter, the exercise price per share is specifically mentioned. You may come across a term which is exercise price or strike price. So if you refer to my initial example of Honda City car, now that 2.5 lakh rupees is the exercise price here, right? To get a option which whose fair market value is 15 lakh, I am getting it by my company or my organization by just paying 2.5 lakh. So in order to exercise a equity share whose market value is say 1500 rupees, and to exercise it, I just need to pay 250 rupees. So 250 rupees will be my exercise price or strike price. Now, depend on the organization and depend on the company's ESOP policy and grant letters. Exercise price or strike price can be zero in some cases where organization doesn't ask or charge any exercise price over their FMV. It can be 50% or 40% of your FMV, or it can be equal to FMV if it is a grown up enterprise or say listed entity or at a very late stage of its journey, right? Exercise period, same as vesting period. Earlier, I explained the vesting period, which was telling you, okay, you have got a 100 option, and this 4 year period will be your vesting period. That means the vesting will complete it in the next 4 years. Now, exercise period is the period which gives the employer right to exercise their vested options, right? So it is not like you have 25 or 50 options got vested. Now you can exercise this whenever you want after 5 years, 6 years, or 4 years, right? So there is a specified vesting or exercise period mentioned in your ESOP grant letter, right? So exercise period can be different for your active employees or inactive employees. So if we are an active employee in a company, my exercise period after vesting gets completed can be say 2 years from the vesting date, can be 3 5 years from the vesting date, right? But if I am leaving the organization or I have resigned from the organization, right? So my exercise period can be mentioned in my policy, say 30 days from my last working date, or 60 days or 180 days from my last working date. So exercise period means this is the time limit or this is the time frame in which I need to exercise all my vested options. Any question or query so far? Now coming to market price, again I will refer to my earlier example of a Honda City car. When I explained a Honda City car where fair market value or a market price is say 15 lakh rupees on the date of grant, and you are getting it at 2.5 lakh rupees. So market price is the actual price of that asset or that option in the fair market or the open market, which if you were not an employer or if you were not getting this in form of ESOPs or options from the organization, what actual price you would have paid to the company or paid in the open market to get that asset or to get that ESOP, right? And expiration date is when my exercise period gets over, say 60 days from LWD. I left the organization gives me 90 days to exercise all my vested options. If I do not exercise within next 90 days, it will get expire, right? So 90 days from LWD or say 5 years from the vesting date, whatever case it is, so that is your expiration date. You need to carefully check on your expiration date, right? I will take a 30-second pause here. On my screen, you can capture it as a screenshot or you can just scan it. There are more detailed write-ups or our blogs on this in much detail, which you can later on refer to. You can quickly scan it, or maybe you can take a screenshot so that you can later on you can scan it and just go through our these things in more details. Now, as an employee, I will again give this example. Think of yourself as an employee when you first received the ESOPs, or whenever you come across this ESOP terms, your company has granted you 100 options, or say 1,000 options, or 5,000 ESOPs, right? And you come to know via email, or maybe a unofficial or official communication, and you received a grant letter. Now we'll be decoding grant letters in further detail, so that other than quantitative terms, whatever is mentioned in my grant letter, what we or I as an employee should be careful of, and what qualitative detail we should understand or read in our ESOP grant letter or the ESOP agreement which is shared by the organization, right? So just take an example or refer to the joining letter or the offer letter which you have received when you join an organization, or when you clear an interview and you got an offer letter from any organization, right? What as an employer, as a human nature, but all we just see the name, date of joining, designation. I'm giving my own reference and own personal example. You can just relate it whether it happens with you or not. Whenever I have received or accepted an offer letter or a joining letter, I always see the name is correct, date of joining, offer letter date is correct, what designation I'm going to join in, what is my expected date of joining, and just directly jump onto the last page, which is the annexer. Okay, by what is my total CTC and gross salary, right? Okay, this is my basic HRA, and even I can say most of us do not go through that breakup of CTC as well. Okay, what is basic, what is HRA, what is special allowance, what is the non-taxable or taxable part. We just jump onto the conclusion. Okay, this is my gross salary, this is TDS, this is PF, this is my in-hand salary, and we just go and accept the offer letter, right? So there we can do that because it is 90% of the case the grant letter or offer letter or a joining letter is generic or a standard for the entire organization, whether we are joining as an executive or a senior VP, right? But think of a grant letter. Now, grant letter is not a standard or a generic letter which gets rolled out to all the employees at a single time, right? So every option holder or every employee may or can receive a different grant letter from the company basis different conditions, different parameters, different time based or performance linked conditions, or different vesting period or vesting schedule, right? So we as a recipient or employee should clearly read out, other than these quantitative details, what else is there in, right? So quickly run it. We go through the what is okay. This is my grant date. This is the total number of options which I have been granted. This is my exercise price. Now again, I am recalling, exercise price is the price which you will need to pay in order to exercise your ESOPs to get it converted into equity shares, right? This is not the actual share price. Now 90% or 80% of the people at a first go may relate or confuse with exercise price or fair market value, right? So exercise price will be the price which you will be paying to the company in order to exercise your ESOPs and get it converted into equity share. And current share price is different one, which is a saleable price, or if you go into the open market, at what price you can sell your shares or ESOP, right? And what type of option it is, whether it's a time based vesting or a performance linked vesting, right? What is my cliff period, so that today is my grant date when the first vesting will happen, whether it's 1 year standard or whether it is 2 year or 3 years, right? If it's a deferred vesting schedule, right? And then we read a detail in detail the vesting schedule, which generally it is 4 year 25% getting vested annually, but on a case to case basis it may get vested semi-annually, quarterly, or now you can see example of Misho, which started the monthly vesting as well. All right. Different terms in the grant letter which we may or may not check, and which we should be aware of while accepting our first or maybe the later on grant letter. It is not like it is only for the first time grant holders or the first time ESOP recipients, right? It can be read out or it can be understood if you are even receiving the ESOP for the third or fourth time from the same or a different organization, right? Most of the time what we see, okay, 1,000 ESOPs we have got or 100 ESOPs we have got, right? But just ask a question to yourself whether just knowing the quantity itself is sufficient. Okay, I'll say I am giving you 100 units of my company. Will that be sufficient you to know or accept the grant, or you will be more keen to understand the total value which will be granted to you, right? So other than the quantity of the grants, you should always be asking or you should always be aware of the current FMV of the ESOP. So now if I have received 100 units at a price of 1,000 or 100 or 5,000, it will, the unit will remain same 100, right? But this FMV will drastically change your perception toward the ESOP, right? Whether you are receiving a grant of say INR 1 lakh rupees versus whether you are receiving a grant of INR 10 lakh rupees. So my request would be to check the quantity as well as check the FMV of on the date of grant or the nearby date. Or if you it is not available, you can check it with your finance or HR function, or you can just know it from the previous round of valuation as well. Then you can see the point number 3 here. Then you will come to know whether the ESOP which I am receiving from the company, is it worth say 5 lakh rupees or 1 lakh rupees or say 25 lakh rupees, right? Then you will really value that number or that amount, right? FMV to EP ratio. This is not any mathematical formula. You can just say, if take example of Honda City again, 15 lakh was FMV and EP was 2.5 lakh rupees, right? So 15 is to 2.5. Now, how much you are paying or what percentage you are paying as an exercise price, right? In order to get that ESOP exercise, right? Whether 100 rupees worth of ESOP is getting granted to you at exercise price of 100, or whether it is getting granted to you at exercise price of 1 or 0, right? This create a lot of wealth and this create a lot of value for you as well as for the employer, right? Now as an employee, again reiterating this example, my company gives me, okay, I am giving you 15 lakh worth of ESOPs today. I become very happy. Then next moment I come to know, okay, to exercise 15 lakh worth of ESOPs, I need to pay exercise price of 15 lakh rupees. So what value I am generating? What is the wealth that I have created today? Zero. Versus for 15 lakh worth of ESOPs, you will be paying 2 lakh rupees or say 2.5 lakh rupees as exercise price. So upfront you are getting a perquisite or a valuation gain of 12.5 lakh rupees. So this we need to very carefully check or very carefully compare it with the FMV to EP ratio. What is my current FMV and what is the exercise price which I will be paying in order to exercise? We have clearly explained exercise and vesting terms, right? This is your exercise condition, this is the vesting period, this can be the vesting conditions. For example, it can be standard time based vesting. You just keep on continuing your employment with the organization, your option will keep on vesting as per your vesting schedule, right? Otherwise, if it's a performance based vesting or any condition is linked to exercise, you can just check it, okay, what performance parameters are there? Is it just my OKRs or annual appraisal rating, or it is my performance milestones or some organizational achievements which is linked to the organization wide parameters or KPIs, right? Other terms and condition you can always check in specific or in general, whatever it is mentioned, which can or which can include like the total period of vesting, your exercise period, like after how and what condition it will get expire, what is your liability under this. So as an employer, liability ESOP is always a right to an employer, it's not a liability or obligation to an employer, right? So it is our will whether we want to accept or reject at a time of grant, or whether we want to exercise whenever it within the exercise period or not. If we will not exercise, it will get lapse, right? So always it's a right to an employee, not a obligation or a liability, but we need to carefully check so that we are ready legally, practically with the abundant with the available cash when we are going to exercise. Maybe we need to pay exercise price, we need to get TDS deducted, which we'll cover in the later part of the discussion about the taxation. So there is always some cash flow linked to exercise or vesting. So we just need to be aware of all those facts. Now here are certain tips which we suggest or we give you, like what kind of a question you need to ask at a time of grant to your organization or to the function. All right, okay, what will happen to my ESOP if I leave, or what different scenarios of exit as well, like what will happen if it's a normal resignation versus if it's a termination case, or maybe if it's a natural, say in case of a permanent disability or a death, how my vested or unvested option will get behaved or will get tagged, right? So in ESOP policy it is clearly mentioned all the scenarios. Okay, okay, in case of a resignation all your unvested option will get lapsed. In case of a termination, maybe your vested option will also become lapsed, and so on. It is clearly mentioned, so please read all those details in very carefully. All right, is there any restriction which is linked with your grant or ESOP in order to exercise or in order to sell? Is there any lock-in period? For example, I have seen certain practical cases in industry which we do not recommend, but there are certain practical use cases where employee has 100% vested their ESOPs, but there was a lock-in period of 12 months after 100% vesting. So employee need to be with the company for next 12 months after 100% vesting, otherwise they cannot exercise a single ESOP, right? So these are certain checks and balances which, if we go through that in detail, if we carefully understand that, we'll be always ready with the upcoming scenarios, right? And what type of options you are receiving, whether it's a simple ESOP which is linked with the time, or whether it's a ESOP which is linked to the your own performance, or whether it is linked with the organization performance, right? Now other than this, I'll give you a very quick information where another kind of a confusion may arise, right? From which date my cliff or my vesting period will start? So there are multiple dates. One is the issuance date, when the organization issue ESOPs. One is the actual grant date at which the ESOP has been granted, or the legal grant date, right? One is my date of joining. One is the date when I have accepted it. So there are n number of dates. So we should be always focused on the grant date. So cliff period will get started from the grant date. Your vesting period, exercise condition, everything is linked to your grant date. So practically the issuance date or a commitment date can be different from the actual grant date, right? For example, you joined the organization, they committed you or offered you at the time of joining, you will be granted 500 option after completing the probation period. Now commitment date was the joining date or the offer date, right? But you actually get the ESOPs after 3 months or 5 months or 6 months, right? So the cliff, the vesting, everything will get started from that grant date itself. Right. Now you can see the big numbers on our screen. This is not a fiction. This happens actually, and this has happened. That is why these are some news article, right? So ESOP is a win-win for both employee as well as employer, right? Employer gets a cream and a best talent from the market, a long-term retentionship, right? Employee gets a loyalty bonus or a loyalty award or an incentive by being staying in the company throughout the journey from the early stage to the late stage, right? So they have devoted their good amount of their career in that particular brand to get it grow, right? And that is why they have received such a huge amounts, right? So employee, you can see many article in Entracker, your story or startup news is, right? Okay, employees from Zomato has cashed for say some billions or some millions through ESOPs, or 100 million of ESOP buyback has happened. So this actually get happened, right? So employees make money through ESOPs, right? You can take examples of Swiggy, Zomato, Flipkart, Razorpay, Freshwork, or you can take any organization's example recently or maybe from the early past, right? So this happens, and they have understood ESOPs very well. They have given certain weightage to their ESOPs as an employee as well as an organization, and that is why this has become true, right? So these people have organized. I personally know some of my colleagues from delivery, some of my colleagues from Zomato, or some of my friends in Paytm who had actually made liquidation of ESOPs in 7 digits or more than that as well, right? So it also depends at what stage of a company you have joined in, right? So it is not like if 1 lakh companies start rolling out ESOPs, so 1 lakh employees of those 1 lakh startups definitely make money. It depends on the stage of the company as well, when you actually join, how the organization is behaving. So all those factors are, we need to take care of, or we need to consider those factors as well. Think of an employee, or think of a person who joined Zomato in 2011 and 12 and stayed with Zomato till their listing or IPO. Think of those few employees who joined delivery in 2011, 12, or say 13, 14, and stayed with delivery and still are continuing their employment with that company, and how they have liquidated and how they have made money through ESOPs and all, right? They understood it, they valued it, they very carefully read and accepted everything, complied with it, right? Stayed with the organization, and that's how, and what's the result, which you can see on the screen, right? Yeah. So this is what I was just explained, right? Early stage, if you join a early stage startup, right, or say a seed funded startup or a series A startup, definitely there's a higher risk, but a higher potential, or a higher reward potential as well through ESOPs, right? Because you have joined, say, Zomato in 2011 or 12, so it was a higher risk at that time, right? But company has grown multifolds, ESOP's value has grown multifolds. You as an employee can make it the way you want it to be, right, for your company, whatever you are in, right? And as we join a later stage company, or we join, say for example, if I join Zomato or delivery today, right, versus if I have joined Zomato or delivery in 2011 or 12, or maybe Flipkart in 2008, so what could have been the difference? So you can easily relate or correlate with that, right? If, and even in the audience, someone of you are working with a very good startup or a very good organization from its inception days, or from the early team members when they have joined it, right? So you can clearly see the difference, or you can clearly relate it, right? This though, what value of, or what portion of your CTC should be granted to you, or you should negotiate when you are just joining a company, or you are asking or negotiating offer maybe, or when you are receiving ESOPs, though there is no standard formula, or though there is no standard policy, it's on a company to company and a state by state, and employee to employee it differs. But if you see a general rule, or whatever, if you go out to industry, you can see in early stage companies generally it is a larger pie of your CTC, versus a late stage company, or a listed entity, or a company which is going to file their IPO or DHRP with the SEBI in the next 5 or 6 months. If you join them today, then the ratio between your CTC or ESOP can vary accordingly. Also, the exercise price and FMV, that ratio also get uh, a variation. If you are joining a early stage startup, the FMV to EP ratio will be very high. For example, you will need to pay, say, 0 rupees or 1 rupees for a share which is valuing in market at 100 rupees, versus if you join a listed, or a about to list, or about to go for IPO company today, and their share price is 100 rupees per share, so you may need to pay exercise price around 50 or 60 or maybe 40, right? Whatever it, as per the company policies and as per your grant letter. So higher the EP ratio, FMB to EP ratio, higher the risk. You do not know whether the company will grow that multifold or not, whether ESOP will get a chance to get liquidated or not. What if the company doesn't go for IPO? What if my ESOP doesn't get liquidated through a IPO or through a merger acquisition, right? What I'll do for my ESOP? So there are multiple other ways which company always keep on finding, through secondary market transactions, through a buyback of ESOPs, right? In order to give that benefit to their loyal employees and to their seasoned employees, right? Yes. Now, as a employee as well as an administrator or a controller of ESOPs in our organization, or if we are a beneficiary of the ESOPs, right? This is the question which comes upfront when we see the ESOP or the grant letter for the very first time, as well as this question keeps on triggering in our mind on a event to event basis or on a year to year whenever our vesting is happening, whenever we are thinking to exercise, right? So I'll just break this taxation stages and events in a very simpler way and then explain how it happens, right? So ESOP get taxed in two stages and two events, you can say. The first stage or first event is when you exercise your vested ESOPs, right? Then ESOPs are getting converted into equity shares, so your options are getting converted into asset, and then a taxation liability will arise in form of perquisite income or perquisite tax, right? And how the calculation will happen, I'll just explain. And at the second time it has already become your asset because you have exercised your options. Now it's equity share, and which is your personal asset, like your home is, like your car is, like your mobile phone is. And whenever you get a chance to liquidate it or sell it in an open market or in a company secondary transaction or a IPO, now you are selling your personal asset to the market or to an investor, right? So all the gains become your personal gain, right? So these are the two events. Now how the calculation will work and what kind of numbers we'll keep in mind. I'll just take a quick example. You got a ESOP of 100 rupees by paying exercise price of 10, right? So 100 रुपए की चीज आपको 10 रुपए में मिलती है. So 90 rupees is my gain because I am the employee of the company. That is why I have received ESOPs of 100 rupees at by paying a price of 10. So 90 is my perquisite income, which will get taxed as my normal salary, which will get added to my salary or bonus, right? Whenever I exercise my vested options, my perquisite income will arise, and this 90 rupees per ESOP or per share will be added to my perquisite income, and my company will deduct a TDS on it. Now this has become my asset. I have paid tax up to 100 rupees. Tomorrow, at a time of sale or at a time of liquidation, if I am going to liquidate it or sell it at a price of rupees, say 200 rupees, right? Now, a difference between 200, which is the selling price, and 100, which was my FMV on date of exercise, is my capital gain, because now I have sold my personal asset, which is ESOPs or say mobile phone or my house property or whatever. So any gain which is happening on my personal asset, it is no correlation with my organization or my being an employer perquisite, right? So it will be treated as a capital gain on which I will be paying a capital gain tax. Depends whether it's a long term or short term. With the tenure you have holded it, right? So this is the taxation part which we discussed, right? Okay. Now we have covered entire ESOPs from granting, say, grant letters, exercise period, vesting period, cliff period, conditions, vesting schedules, vesting conditions, taxation, liquidation, exercise period, everything we have covered in a very short, so that we can give you a glimpse around that. Or if there was any confusion, we have tried it to resolve by giving some practical and some day-to-day use cases. Uh, right now we'd like to ask the team on all the questions in the chats which we may have received.